it's time we talk about the elephant in the room. And we are probably in a bear market right now, which can spell an end to a lot of things and the beginning of not so interesting stuff like real estate dropping in prices, stock market dippings, crypto market dippings, and much more. So when a bear market comes in coupled with high inflation rates, so these are signs of an impending recession, which is not great for us. Because in a recession, people lose their jobs, companies reduce spending, as daily necessities become more and more expensive, and as a middle-income salaryman like us, it's not that good. So we recently got out of COVID, then the economy started opening up, people starting to travel and explore the world, and then we get hit by inflation. And most recently in the tech sector, we have seen layoffs after Tesla leading the way, cutting off the Singapore country manager after the layoff warning, and other tech firms like BlockFi, Netflix, Clubhouse, PayPal, Skills has also been cutting off headcounts, which is probably a knee-jerk reaction to save some funds for the business and to keep the business afloat. And in the crypto space, we have seen companies like Gemini, Coinbase, and Mercado Bitcoin all reducing headcounts, freezing hiring, or rescinding offers that was given to prospective hires. And the most recent one is Crypto.com, who joined in the fray and laid off about 260 employees, which accounts for roughly 5% of the company's headcount. And as bad as it seems, this is probably the toughest test that crypto, and not only Bitcoin in particular, will have to survive to have the test of time. And amidst all this bad news, there is more.
Here I come.
With Bitcoin sinking to the low 20,000s, where most people are predicting that that is the bottom, it comes with another set of problems here, which is why the proof of work system has issues and it's not the best system. So in the proof of work model, Bitcoin miners operate computers called miners to solve cryptographic puzzles, and the first computer that does it gets a reward in the form of a Bitcoin. And these miners are pretty expensive, that can range from $1,000 all the way to $20,000 depending on the specs you are looking for. And definitely with higher specifications, you'll be able to solve these puzzles faster, which can give you a better reward rate, but this comes at a premium. And based on the top of the line machine and Singapore's electricity tariffs, and if we run this machine 24 hours a day, 7 days a week, we'll be losing $8 a day, which doesn't seem like something that many people will want to do. And the reason that we are at a loss right now is that the rewards that are distributed are in the form of Bitcoins, which fluctuate in price. If the Bitcoin prices goes up, miners will be in profit, and this will keep them happy because no one likes to lose money. But if the price of Bitcoin goes down, then these miners are not incentivized to keep on mining because the cost of running the miner is much higher than the rewards itself. But at the same time, we haven't included the cost of purchasing the machine, which is roughly $20,000. So this brings us to the situation that we are in today. If miners are not incentivized to mine Bitcoins, this will lead to issues of unable to fulfill transactions, higher gas fees, and a backlog of transactions that are waiting to be processed. And it already takes roughly 20 to 30 minutes for a Bitcoin transactions to go through, and now it might take even longer. And come 2024, Bitcoin will go through another halving once again, which will reduce the mining rewards by 50%. And by doing this means that miners will earn less rewards, which will make it even more unprofitable to mine Bitcoin. At current times, the reward per block is 6.25 Bitcoins, and this will become 3.125 at a block height of 840,000. And with fewer rewards and rising electricity costs, this can and will crypto the ecosystem. And definitely there will be people who will disagree, but feel free to leave in the comments down below and we can have a discussion about it, because it will open up more views that others have, and currently this is only my personal view. And if we back up a couple months back, many other institutions or companies have been buying Bitcoin and proudly showing them off. And right now we got roughly 27 companies that own Bitcoin, and none of them are in the crypto space per se. So if you look through the list, the top two firms are MicroStrategy and Tesla, which a combined owns almost 1% of the Bitcoin supply. And think of it in this perspective. The current market cap is sitting below $1 trillion as of recording. And if these companies sold their Bitcoins right now, this will take away almost $4 billion worth of market cap. And by doing this, it will release 170,000 Bitcoins into the wild, which will cause prices to fall even further. And when prices start falling, miners earn lesser, less transactions takes place, and this could be the end of Bitcoin. Although Michael Saylor has vowed not to sell any Bitcoin, but this has come under the scrutiny because of the Bitcoin prices plummeting. And there might be a case for MicroStrategy's Bitcoin going into a margin call as well. When a margin call happens, the owner of the asset has to top up cash to prevent losses or to close their positions and take the loss because these assets were probably pledged as collateral to borrow loans. So in MicroStrategy's cases, the Bitcoin purchases were not done with just profits from the business, but some of them were purchased by borrowing through a convertible bond, insurance, and borrowing against the Bitcoins that they already have. And it is said that the $4 billion purchase of Bitcoin, $2.4 billion was funded through loans, which means they might get margin called, and when that happens, we might see Bitcoin free falling once again. And the margin call price, according to the CFO Fong Le, is that at price 21,000, which is dangerously close as of recording, and hopefully by the time this video is out, we are slightly above it and sitting on a support level. And fun fact, the average prices of MicroStrategy's Bitcoin is at $30,700 after fees and expenses. So these might be very tough times to stay mentally strong, and even our YouTube portfolio is plunging really deep. So I personally see this as just the beginning, and there'll be more bad news coming which will send us really deep down. So for now, I'll be sitting on the sidelines and holding onto my war chest tight. In an event that there's a good price to be in the stock market or in the crypto market, we are able to grab some assets, and hopefully over the years will amount to something for us. So that's all for today's video. There's too much negativity in one video, so do help by smashing the like button to show some support, subscribe if you haven't, turn on notifications to get notified. Stay safe out there, and I'll see you in the next one.